Okay. All right, let's try this again and see what's changed since the last attempt. All right, let's start with Ada. Think I think Harg has called this one out. He wanted to see this one, so we'll start with the weekly time frame and work from there. So the first thing we can look at is the initial run up, right? So bull market starts here. Okay, got this consolidation, we have a big run up. Everything goes parabolic. But we're really focused on, and I think you guys are focused on like what's happening right now, what's happening next. So let's go there. So this is the weekly chart. We'll start with higher time frames and work our way down. I think I can show you guys some stuff that way. So this is what I kind of charted up for ADA right now. I got these two green boxes that I would be interested bidding in the event that we flush, because there's a lot of FUD out there right now, and Elon is, I don't even want to talk about that. That's a whole other conversation. But anyway, let's talk about ADA. Let's look at this. So I've got let me start with this. So the basis of the charts that I'm going to show you guys tonight that were requested, I'm just going to look at high R&R ratio trades and what I think are good opportunities to get in, and kind of give you what my outlook on whatever token it is we're looking at right now, and kind of talk about the past trading and how I think it could trade in the future, given its current structure. And of course, there are a lot of factors. So along with basic structure, there are other like black swan events that can occur. Obviously, we saw one, but anyway, let's get to it. So three lines that stuck out to me like instantly, and some of them won't make sense until we step down into lower time frames. But the first one that instantly made a lot of sense to me is this one right here, this horizontal here. And the reason that this one stuck out to me is because we had this big run up, right? Like we're going parabolic. Where that's 1, 2, 3, 4 green weeklies in a row. That's significant. So that's the top for that run up, and then we start ranging in this little accumulation range here, and we have this candle here came and I hit the same area. So that's telling me that this was resistance within this zone we were trading here. And then again, we have this candle that, kind of it shoots up above, but still you don't have the body that's coming above this line. So still acting as resistance in this range. So we're ranging really hard, we're accumulating. There's a lot of accumulation here after the run up. And then this line down here stuck out to me because of this wick down that held. And we'll get into why these lines are there in a little bit more detail as we come down. So let's go to the 3-day. So 3-day. And also, let me explain these lines here. So the black lines with the numbers over here, this is Fibonacci or Fib lines, and they help you judge a retracement or an extension of an asset when you're trying to chart. It gives you ideas of where you might have some resistance, you might have support, etc. That's the gist of it. I'm using this more as a visual tool for the video. So now we're on the 3-day, so we've kind of come down on the time frame, and as you can see, we have our run up, and then again the accumulation range. You can see a little bit better about how long we traded in this range right here. And that's why those two blue lines are really drawn, is because this was the top here for resistance and hit multiple times, and then our bottom wick, that's our low, that's our range low. So that's why I drew the line. You could even bring it down a little bit lower if you wanted to. You could bring it right there at the top of these two candles that are bunched up like that, because this is like the real top of that huge run up, right? So this is a good level. So wick down, so range low, range high, and then we're just accumulating. And the reason that I chose this green box, again, is because of this accumulation range. So if there was a flush, it makes a lot of sense for me to bid here in this area, because this is where we had a ton of liquidity. There was a lot of accumulation. This area is gonna act as support. And this is in the event of a big flush. So big flush, I'm bidding here. If I get lucky, I can put stink bids down in this area along this blue horizontal, and maybe get lucky and pick something up that way. And this, well, don't want to move that, yeah. Okay. This green box here, you see these candles bunched up like this. This tells me that this is another accumulation area, and that this will most likely act as a support level and will probably be retested at some point. So I would bid here first and place my stop probably right here, somewhere in this range, below the bodies. Depending on my position sizing, that might change. I might come all the way down here, just depends. But anyway, this accumulation range indicates that I would bid here. And same with this one. This one is more significant and over a longer period of time, so that reflects that there's more strength here, where buyers will step up. This one is new range, so this would be my first spot. Anyway, so now we know why boxes are there, why everything's drawn, and we can get on to what's happening now, which is this monster green candle. Let's go down to the daily. And again, I'm going to keep pointing this stuff out because I think it's important, which is this accumulation range, right? And you can see that as we step down into lower time frames, it looks like the box, like it looks like you have candles below the box and above the box, because, well, you do. But I'm trying to bid the median of this range is where I want to bid. The median to the low end of the range, because really this area, right where this red line is, all the way through. That's the median, that's the meat of the liquidity. Everything below and above are just deviations. So maybe that gives you a little bit more insight into what I'm thinking and why. And you can see this accumulation range up here a little bit better, as we step down into lower time frames. So right now, ADA, thought we were going to have some resistance here at this fib level. And why I thought that, or probably many traders thought that, is because we had this wick right here that touched it. So it wicked up, body came back down, and then we formed our next daily candle, which before in my previous video was just starting to form, so couldn't say much about it. Now it looks a bit more promising. You have to see how these things play out, but really what you're looking for in terms of extension here is probably something like this. So we more or less broke this level. So in best case bull scenario, what you're looking for is probably something like this, where you have, let's go down here, where you have something like this. You have this run up, retest, up. And then this is where I would look to have some resistance again. That's the first level I would look at, because when you're trading a chart like this, you have to use any tool that you can to look into the future, because you don't have a lot to go back on, right? If that makes sense. Like there's no previous price data and in this range that makes a lot of sense to me in this particular chart. So that's what I would look for. I would look to come and retest this level in some capacity, or range trade here, unless we get just really hyper bullish, which is possible. But anyway, this is an area I would look to first for ADA to start kind of running out of steam a little bit for at least a short period of time. And that's in the $2.30 range. That's just from a trade perspective. So let's look at something. So now I didn't know if you guys noticed or not, but I stepped down to the 4-hour from the daily. And again, we see this range, right? And we see the wicks here. So deviation from the mean. And down here we see the range lows. And there's something I wanted to point out on the daily chart here for ADA. That's this. So looking back in time, pretend none of this has happened yet. And you're looking for an area that you would buy, right? After this run up, right? So you have this run up and then you flush. And then immediately you have a huge wick down, gets bought up instantly, run up, and then you're kind of creeping along and start to form this range. So when you make this run up, like after this massive run, this massive just green candle, green candle, green candle, green candle, just like up only, like quite literally here in this range. The first thing that I'm gonna do as soon as that cools off is I'm gonna put a horizontal there at that top, because I know there's a high probability that if we continue up, we're gonna retest this area. And so let me show you an example of that. So back in time here, I'm looking at this. I see it kind of top out, right? I see the top. I see the long wick up, and then it follows and flushes. That's when I draw this horizontal, that blue horizontal line right there. That's what I want to look at. If we continue up, well, one, if we break it, then that's significant to me. But really, I'm more concerned with being able to catch a wick or catch a wick or a price dive down into this area again. That's really where I want to long, because it's the same principle as what I was talking about a little bit earlier, of where you want to break resistance, which is what this line represented here as resistance. As soon as it started to fall off from that run, it broke resistance, and you want to see it trade above, come back down, and test that same area as support and prove that it's support, which is exactly what happened. Let's get rid of this. So you guys are, so we talked about that area. So keep that in mind and why that line is there. You would have drawn that. You would have looked for the flush, and then you would have looked for a break of that resistance and then a retest. So you have this break, you have the break, but no retest yet. You had 3 opportunities here for retest. And my God, this one, this candle here, this candle here, let's clean this up. This candle here got bought up instantly. Look at that lower wick. So comes back down, breaks this line, immediately bought up. Next daily candle, immediately bought up below this area. Next daily candle, immediately bought up below this area. And you could even call, if you wanted to, you could even call these 2 candles right here a little bit of accumulation, a little bit of fight between bulls and bears, a little bit of accumulation right there. So you draw this line, and look, you place your bids there because you want that break and that retest. And once you get that retest, that's where your bids are sitting. Your buy, so your bids are there. You bought, and look at that, boom, to the upside, and not just to the upside, to the like year-end profit all the way through this accumulation range. And so that's why it's significant to look at these things after a run up like that. Like, this is your opportunity to buy. This is the real opportunity. That's a good trade. And then, okay, so I talked about that because that's important, not only for this, but man, I really missed out on that. Like, what am I gonna do, right? Like, I need another entry spot, and then all we're doing is this. We found our first resistance point. Come down, resistance again. Okay, we tapped it again, back down. So after this happens, the very first time again, I'm drawing my line. Like, that's my new resistance area. So now I've got this range. I've got my line here, and I've got my line here. So until further notice, ADA is trading in this range. And it did, right? We came up, tapped it again, down, and just traded in this range. Came up, wicked above, still in that range, right? And the reason I referenced this over here a minute ago is because, okay, you missed this trade, right? You're unsure. Like, it looks like a top, you're unsure, not sure what to do. So you missed that trade, and we're up a little bit, and it starts range trading, right? Well, if it starts range trading like this, and it's making kind of just a channel. We're not really making higher lows. We're not really making higher highs, kind of. But it's just kind of trading in this channel. It's just kind of trading in this channel. So you don't know what to do, right? And you're trying to look for a good buy opportunity. Well, you drew this line, right? Might be a good idea to bid that line again. Might be a good idea to bid that line again. And this is a perfect example of that. You place bids in that area, just in this area, it could, because typically if you're trying to looking to get into something, looking to buy something, you want to scale in bids. And what I mean by that is you don't want to, if you're trying to buy 100 ADA tokens, like I never put a limit order in for 100 ADA tokens or that US dollar equivalent at one singular price. I ladder bids. So again, what I mean by that is I'm I have my I have my line, excuse me. I have my line, but I'm bidding. I'm bidding here. I'm bidding here. I'm bidding here. I'm bidding here. I'm bidding everywhere in that area so I can catch a wick like this back down to this area. And look, that is you know how in the chat I always say lucky entries and likely exits. Okay? This is what I mean by that. You want to try and get these anytime you can. So I think that was important to share. I hope that makes a little bit of sense to you guys. If not, let me know. So anyway, we move on from this area, right? And it's obvious what happens if you bid that area. Like the plan from this is to you're bidding the range, you're bidding the actual range low here on the retest of that support. And you're hoping to either sell this line at resistance and keep trading this range, keep trading this range, keep trading this range until it breaks one way or another, right? It either breaks down or it breaks up. So, move all this, clean this up. Then we can talk about where we're at right now. So then we come up here, all right? We break this resistance level that's held here, that's held here, and that's held here, right? We break this and we break it with some serious conviction. And remember what I've talked about probably a million times now in the chat, but at least I'll be able to demonstrate it here now, is you want to see resistance. Well, one, the more times you tap resistance, the weaker it gets. So this is our 1, 2, 3, our fourth time tapping it. So our odds are getting more and more likely that we're gonna break this thing, but it's not guaranteed. So the one thing that I reference in the chat as well is you want resistance to break and then retest that resistance as support. So you have this strong break, right? And we trade in this range for days in this tight little range of accumulation and then retest it. And then look at that candle. You retest it and then boom, look where we are now. So you know how I make those little lines on the charts that swoop up like that all the time? This is what I'm talking about, guys. This is what I'm talking about. You break resistance, you come up, you retest support, and that's where you buy. Boom. You have to have the solid range of trading above that once you've broken it. And that's what I mean by broken with conviction. You've broken it, you've traded above it for days or some period of time that's significant for the asset, like whatever that ends up being for, and that's different for different coins. But in general, that's what you want to look for. So I wanted to show you guys that. And I also wanted to show you as we step down in time frames why this looks the way it does. Like it makes more sense to me anyway when you start from higher times and break it down to low time frames. So anyway, we had that break of resistance, a retest of support, and we're cruising right now. We're cruising. We are absolutely cruising. So right now we're looking at a break of the fib and just continuation. And this continuation, in my mind, is likely to do something like this. Is really your best guess. Let me step down the time frame a little bit. We'll step down to the 4-hour. I'm not going to go into the hourly and any lower time frames than the 4-hour for you guys, because I think you guys like more of like a longer term or a swing outlook. That's kind of the vibe I'm getting in the chat anyway. So come over here and we're strong. This is strong. Get that accumulation range right here. That small one, those tight candles. And that's a reason I drew this line here, is because I think this tight range here is a likely area for it either to test the top of this range as support, so right here, or the bottom end. But I always err on the conservative side because I'm extremely risk averse, just the way that I typically operate. So I put my line at the low here, and I think it's likely that ADA does something like this. So now that we've broken that fib, we'll probably have some continuation here and cool off a bit, and either retest that fib as support, or we're going to come down here and test this low, either that high or that low, right? So one of those two things is going to happen, and regardless, it's going to do something like this. I think we're going to do something like this and kind of trade in a range, right? And do the same thing, then up, then range, then up, then range, then up, something like that. As long as we're in a bull market, I think that that's reasonable to say that we have that. And there's a few things that can change that, right? Some black swan events, like the Elon thing, that can cause a flush. Any sort of outside event, like, I don't know, things that are just very unusual, like a centralized exchange hack, or a the Justice Department is investigating whatever, or not investigating because that's kind of just FUD, but actually find something out that CZ has been laundering money this whole time for cartels. Who knows? But anyway, the reason I say all that is because you have your plan, right? Like the trade that you would have taken is either this one, in my mind, or this one, this retest of support. Yep, that break and retest. But if you didn't, you would be looking to bid these areas. You'd be looking for let me clean this. You would be looking for this area to hold as support in that range, or you would be looking for this area to hold as support. More likely, there's been a lot more liquidity here and a lot longer of a range. So you've got a stronger support here. And even stronger than this is this other green box where we see this long accumulation range. That's going to hold as even stronger support. So, keep that in mind as you move forward with ADA. And another thing I would say is, regardless of any event that happens, Elon comes out and said he dumped $1.5 billion in Bitcoin off Tesla's balance sheet and sold it for, I don't know, frickin' cat coin or something stupid that he just made up. This is why we always set stops. We always set stops. Okay? You have to have an invalidation. Like, there has to be something that invalidates. There has to be a level that invalidates your position. You can't become a bag holder and just hope for up only. You just can't. We're watching. Interesting. See how this candle plays out. We got this wick forming right now, but have to wait and see how that candle closes. I'm kind of bouncing back and forth. I just thought that was interesting. But you have to have an invalidation level for your trade. Okay? So say this wick continues down, right? And you're long from, you FOMO'd in, right? So you longed above this area. So you're long from here. Okay? Where do you feel comfortable taking a loss? And the answer better not be 0. That would be concerning. You do not want to become a bag holder and a community member. You're here to make money, make more of a certain coin, make more Bitcoin, whatever. So you have to have you have to set stops. Like, you just have to manage your risk and manage your losses, or else you're just rolling the dice. You're throwing dice and hoping it's all going to work out. You might as well close your eyes and just throw a dart. So let's look at that. Okay, let's look at what a level that makes sense looks like. So back to the trades that I was talking about earlier. Okay, this is just an easy example, so I'm going to show you. So if I'm bidding, I'm in this range, right? This stuff hasn't happened yet up here. And this, I've drawn this line, I missed out here, and I'm looking for a good entry, right? Well, the first spots that I would enter are within this range right here. Those look safe to me. Those look like likely spots that we're going to deviate from the mean after we've made this high. So I'm going to bid in this range, right? So I've bid here in profit. And then if you're actively trading, you would have seen those wicks and test of resistance again and sold. If not, you're continuing to buy here. You might have bought here if you're laddering bids in that area and just letting them sit and hang back, depending on the sizing you put on for this area. And then you most definitely would have tried to get your lucky entry, which is right here. Okay? And talking about stop losses, okay, where's your stop on that trade or position? Like, call it whatever you want. Like, you just bought an asset and you're holding it, and markets are bidirectional. They're going to go up or down. So what are you going to do? You're just going to hope it goes up, or are you going to have an invalidation? So where would my invalidation level be? So I bought here, I bought here. I maybe bought there. I definitely bought here, and I snagged this because I had my lucky entry level there. My stop is going to be right below here, right below this wick. Okay? And you know why that is? Because if I got this entry, that's the new range low. And we have this massive wick, so that got bought up instantly. And that's my new range low. So if there's any further move to the downside from here, I don't want to be caught. I don't want to be caught holding a position if we lose this support. I don't want to. And you know why? Because the next real support that you can draw out, the next real level of support is down here. And I don't know about you guys, but I wouldn't want to hold that down there. That's capital that you could have had allocated into another asset in a better position. And that's something to keep in mind. That's important. That's something that took me a long time and about 5 blown up accounts to learn. How to set stops, where to set stops, and taking a loss when you need to take a loss. But anyway, Hargis, right now, I mean, ADA looks good. Looks good. I think alts are going to perform well for the time being. I really do. Unless we have some kind of black swan. But I think alts are going to perform well. Because, I mean, look what we have. We have this accumulation range and then up. Accumulation range, up. Big accumulation range, up. And I would just watch these fib levels for potential resistance, and maybe there's an opportunity for you to sell and get back in at a lower price and make a few trades. Take that U.S. dollar value, and if you really like ADA, get you some more tokens for your money instead of just holding. All right, so that's ADA. I'm gonna go ahead and move on. Chris, if you have any questions or want me to explain anything further on ADA, let me know. I'd be more than happy to. So let's move to XRP. This is going to be the easiest one we do. So let's go here. Right off the bat, XRP. What sticks out to you? Tell you what sticks out to me. This high. Instantly going to draw a line there. Instantly. That's my high. Okay? On this chart, this is my high. Okay? And that's important because this level is acting as resistance right now. So I think there are different charts you can use that have a little bit more price history. But I thought this was a good one to demonstrate because we're not looking at a whole lot of noise, and this is very condensed, which I think is good for looking at the immediate state of the asset. So anyway, moving on. So immediately draw this line because this is my high here, and this is acting as resistance. So that's done. Next one that's interesting to me, it says right here, and this will make more sense as we step down in time frames, but uh, right near the bottom of this range, this little accumulation range here. The third line, or the third area that sticks out to me, is the top of this range. The top of this range here, I think will hold as support if you really flush. And then I decided to pick the bottom of this range as well, because that will also act as support, not only here, but you can see that it was near the top of this range as well, and here. So you got here, 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 and here. So that's your strongest support area in the event of something catastrophic. And I know you guys are looking for what's happening right now, but I kind of want to give you a bigger picture of things and how I look at something. I look at all the past data before I make a decision on a swing or something like this. So I think that's going to be helpful, and I want you guys to tell me if it's not, or if I'm wasting my time and you want to see something different. I want you guys to take a look at this triangle here. I took the top of this candle. So basically right when we started like our first like real run up. I think it's the first real run up of 2020. Okay? So that's the first real run up and the first top that we saw in 2020. So I'm going to draw a line here. Okay? I'm going to draw a trend line here. But more importantly, I'm going to draw one at the bottom as well, the bottom of that range. So our range low for this cycle. And look at this. Look at this, guys. 2 lines. And look what you could have done. Look what you could have done. So you draw it initially, and oh, look. Looks like we're testing that trend line. Buy. Look at that. What is that? 24 cents to 63? Yeah, that's healthy. And then, okay, you should have sold, but you didn't have to, right? You should have sold on a wick like this. But if you're not a trader, you're looking to buy here, break this line, which it did, and then start to range. Kind of like what we saw with ADA, right? I mean, these patterns repeat themselves over and over again. That's why they're really important to pay attention to and learn. Even if you're not like an active trader, even if you're just investing in said project, you really want to be aware of these things. They're more important than a lot of people realize. So the bottom trend line, you buy the test of that. It bounces off of it immediately, then starts to range. And then what happens? Oh, We broke our trend line. I'm sorry. We broke our horizontal here to the upside. We're still holding it. We broke it here, holding it, ranging. And then, hey, look, another test of that trend line. Looks like maybe another good buying opportunity to add some XRP to my portfolio. And boom. Look at that. Look at that. 44 to, and this is important too to look at. So let's check this out. So not only, so that was what, 40, let's call it 45 to $1.97. Wow. Those are really good, and those are easy trades. Those are easy. More importantly, not more importantly, but I want you to look at this too. Why did I draw this top line? Why did I draw this top trend line? Well, it comes in handy. When I made those two trades, right, by buying the test of the trend line, look what happened. Where's the first logical place for me to sell? Or take some size off at least. At least take a little bit of size off. Maybe the test of the top trend line? Yeah? Because look at that. Resistance. Instant flush. Back down to our horizontal that we talked about. Okay? And this horizontal, like I said, when we moved in on lower time frames, it would make sense. I don't think I explained this one, but I chose the top end of this little accumulation range and the bottom of this V bounce, right? Look at that. That's where I want my line, because these two things combined together, that's notable. And then we have just kind of ranging for now. So two things to look at on XRP right now is this. Well, the first one's this. Oh, I see a couple things I want to talk about. I see a couple really important things I want to talk about. First one's this. This range looks just like ADA, right? Starting to form a range. We know this top horizontal corresponds with our resistance, right? From years ago, which is significant. And we have not broken that with any sort of conviction yet. So we're watching this line, because your ideal trade at this point is one of two things. The conservative approach is to either wait until there's a break above and then a retest. That's when you buy. And then after that retest, you're hoping for a higher range, right? You're hoping that it will, continue a range higher, and then eventually break that. Break this trend line to the upside, and then just go. That's if you're really bullish on XRP, that's what you are looking to happen here. That's what you want to see. But if you're trying to make a trade, you're trying to get take a position, I think this is a good area after we have some ranging above, like we just saw with ADA. So if you want to revisit that and look at what we just talked about, in ADA, the same thing applies here. The exact same thing applies. So we need to break this and then trade with conviction and have flush down, retest, and then start ranging higher. Something really important that I want to point out, because this is a pattern that I see in crypto all the time. I mean, all the time. So I think this is going to be super relevant and super important to pay attention to. I would anyway, because I've played this pattern a ton of times and it's worked out very well for me. Excuse me. And that's this right here. This guy right here. This is an important pattern to remember. You have a big flush down, wick that gets eaten up, trade range for a little bit, and then you have a wick that comes down and flushes. Let me clean this up because I really want you guys to see this. This is a classic bottom in crypto forming that's formed here. This big wick down, and then another wick, so a little bit of range, and then another wick that does not quite come down and meet this one. Doesn't come down as low as this one. It knocks out, and let me explain to you why this happens. Because this is extremely relevant if you're thinking about looking at patterns like this. You need to know why it happens. So you get a flush like this, you get a big wick down, because in crypto, price moves are exaggerated a lot of the time. You get big wicks to the upside and you get big wicks to the downside. That's mainly due to leverage. Like people being over leveraged in one direction or another, and if they get close to their liquidation price or they are liquidated, they have to market sell that position or market buy that position, depending on if they're short or long. And that causes big swings in the price within a small period of time. So that's what's happening here, most likely with this wick. So you have this big wick that comes down, and then let's zoom in. I think this is important, really important to look at. And you have most traders that are novice are going to do this. They're going to be really scared on this move down. Be really scared. They're going to sell all their coins like right here. And they're going to be really scared, and they're going to see this this green candle here. They're like, oh man, that's a bullish engulfing candle. It's going to engulf both of these two, and we're going to get a V bottom bounce. We're going to get this bounce right here, right? Because they're looking, so prior to this wick being formed, they're seeing the candle body up here, which is engulfing this previous candle and this one. Super bullish. By the way, if it closes that way, it didn't. So a lot of people probably bought up here with a stop right here. Or a stop, if they're smart, they put their stop here. But they probably weren't because it's crypto. They put their stop there, okay? Because they're like, well, it's not going to flush to the lows, but it's not going to flush to the lows, and it probably won't flush to this. So it's wicked down really hard. It's been bought up. It wicked down 2 more times and was bought up almost instantly. So if I put my stop below this wick here, I should be safe. No, no, no. No, sir. You are not. You're about to get stopped out. Because in crypto, you have this range trade, and everyone's bought this thinking it's bullish engulfing. Now they're panicking, right? Like, oh no, price moved to the downside. I thought this was gonna V bounce instantly. No, you get this range, and then you have this. It repeats itself over and over again. You get one more flush that's not quite as low as the initial wick, but you get one more flush that busts all these stops. Bust them all. And once it busts those stops, because people aren't typically looking at real levels, and well, they're looking at real levels, but they're not looking at levels that make a lot of sense, and they're buying at places that make them nervous, or they're over leveraged, whatever. Anyway, what I'm getting at is you usually have one wick that comes way down on a bottom like this type of pattern, one really long wick, and then one more that runs stops. And then all those stops get run and it fuels that up. So I just wanted to show you guys that. I thought that was really interesting. It's a little bit off topic, but this XRP chart was really easy to run through. Those trend lines, I mean, I think it's pretty cut and dry right now. And there's one more thing I wanted to show you. And that's this. And I didn't draw this on purpose because I wanted to demonstrate this. So say this move right here has just happened. So we just had this move here that occurred. Where am I drawing my lines? Where am I drawing my horizontals? Okay, so let's make that disappear, because I drew that based off of this price action. Where am I drawing my horizontals? Well, when I'm looking at this, I see one area that really stands out right here. And one more that really stands out to me, which is right here. Oops, right here. Those two levels. Okay. So again, these levels matter. I'm taking the low. So you have this, let's zoom in. Yeah. You have these candle bodies next to each other, right? So I'm taking the high there. This high now corresponds to this low, and it bounced. So this is support. And this confirms it. And I'm taking the high here because the same thing happened. So the same way I took the high of this bunch and the low was confirmed here that this would hold as support, I have the bunch here, these candle bodies together, and then look what happens. Up, we break that resistance, come back down, and test it as support. So both of these are extremely relevant to me. And why do we care about that? Because of this. Lucky entries and likely exits. I've drawn these lines. It's gone fairly up only, right? Dang. I really want to take a long position. I really want to buy spot XRP to add to my portfolio. Where am I going to do that? Where am I going to do that? I'm going to bid here. I'm going to bid on this line, and I'm going to bid on this line. Or, to be more specific, I'm going to ladder bids in this area. Okay? I'm going to ladder bids in some fashion in this area. Right? So if I'm buying 100 XRP, I'm going to ladder that between these levels, between these two lines, a little bit above and a little bit below. And look what happened. Look what happens. This is why you look at levels and you wait for the right entry to maximize your R&R. Like you want it to be, you want to make every trade or position that you take to be as EV positive as possible. And EV positive, what I mean by that is expected value positive. So I ladder my bids on these two areas because that's where I think a good spot for me to get in is. Like I know this tested support once, I know this tested support again. This is an area that if it revisits, it's most likely to hold as support again. And if I did that and I laddered my bids, guess what happened? I caught I caught I caught all this price action. I caught all this. I caught all this. And guess where my stop is? I bet you can guess. Sorry, I just want to clean this up a little bit. And we don't have to do that. Just ignore this. So I caught all this. I caught all this. And my stop is where? Where do you think it is? Right here. Below this low. And guess what? I'm up from, and you can take a higher percentage of your capital or a higher leverage position on this type of trade because you've taken the time to find real values, real levels that have been tested and proven on the chart, and you have an invalidation level. You have a clear invalidation level. You have to set those stops. You have to know when to get out and take your capital somewhere else and use it more wisely. And look what happened. We caught this and we're here. We're up. We're up. We're way up and we're ranging. And not only that, check this out. So you made that trade, right? Or you took that position. Guess what we have now? The low. guess what we're forming right now? Higher low. So that's what you want to see. Keep happening with XRP, and that's what I was trying to draw earlier, and I did. Is you have higher low, higher low, higher low, higher low, and eventually you break it. And that doesn't mean this is the scenario you want to happen, right? And then you have these levels that could come down and act as support, right? You've got this level that matters. If this fails, I'm probably selling. I would have sold up here, to be honest with you, but clean this up. I think this is getting just a little bit too crowded for me trying to explain things one at a time. So what I was trying to get at was, where am I selling? So this should be support, right? This should act as support because it has, right? So if we move to the downside, I'm looking here. If this breaks, I'm most likely going to sell to keep this position in profit. If I'm turning this into a position trade or a long swing, then guess where you want to add? You're going to add, you're going to try and add where? Think about it for a second. Try and add here. And try and add here. That breaks because this has been tested as support and this trend line has held the entire bull run. Now, on the flip side of that, about short positions. This has held so strong, the whole market, the whole bull market thus far. If this breaks, if this trend line breaks, I'm going short. Like I'm taking a short position because I know most likely I'm going to get the dollar something entry and I'm probably going to exit. I'm going to take profit around 60 something cents. Take half size off and run the rest and see what happens. If this trend line breaks, that's not something you want to see because typically if you have a trend line like this that breaks, what happens is you have, it breaks, it retests it. If it rejects, and you end up trading in this range where you keep rejecting off that trend line, you keep rejecting off that trend line. And that's no good. Now you formed a range below your trend and you're looking at either having to rechart a little bit and knowing that this trend line is probably going to act as resistance until you can break it again. Either way, I just want you guys to know that that is a really important thing to watch if you're drawing trend lines that make sense. And you can draw trend lines that don't make sense. Believe me, like you can draw. What's something that makes less sense? This. Why? Why? It doesn't make sense to put the line here. And the reason it doesn't make sense to put the line here is because that's not your that is not your highest peak within the cycle, right? You want to put it at the highest peak. And this doesn't work with, this works with some charts better than others. XRP just worked perfectly. Like you could have, and you can do all sorts of TA. Like some people use triangles, some people use horizontals only. I typically use horizontals only, as you guys have seen in all the charts that I post. Some people use Fibonacci, some people use Elliott Wave, some people use all kinds of stuff. You can use all kinds of stuff. But anyway, um, that's XRP. I'm gonna leave that there. And Bill, you rarely speak up in chat, so let's spend some time on Uni. Yeah, Uni. Let's zoom out. A couple things that I want to point out here that are important that I want everyone to know. Okay, so this here, this is a classic example of a token being listed on an exchange, a brand new token listed. Okay? And the reason this happens is because all the token holders from an airdrop or from whatever are going to let the price run up and then they're going to dump their coins almost instantly. Okay? Usually makes a new low, or at least Tesla usually makes a new low. And then you start forming this range. That's where you want to start to look and take a position. And I want to tell you guys this in case you're looking at a listing on whatever exchange you use. That's a new coin. This is a recurring pattern over and over and over again. So keep that in mind. But anyway, Uni ever since then basically been up only, right? Um, let's see. I thought I heard something in the chat. Anyway, back to Uni. Sorry, Bill. It's basically been up only for this cycle. And so right off the bat, I drew 4 lines, and some of them will make more sense as we drop down into lower time frames. The first line that I instantly drew was this. This is the range high right now. This is the previous range high. So I drew that for 2 reasons. One, it was the high with these 2 candles here next to each other. That's important to me for liquidity, and that is the exact same reason I drew this box. I think this is the golden buy spot for Uni in the event of a flush. You've got all these 3 bodies next to each other, and on the weekly, a lot of accumulation in that range, just like we have accumulation in this range. So that's significant to me. So I think this is you get this opportunity, you take it, unless we go much higher. So when I'm charting the coins that you guys are asking for, what I'm going to do is look at a right now time frame. So this might not apply in like 3 months, right? We might be way too high, or we might be in a bear market. So So keep that in mind. So I'm talking about, you know, the the very near future where I would look to bid. So this is the box, and we'll get to explaining why that's the box later, other than this liquidity, but that's the main reason, these candles here. And how that's kind of dipped in. This range low is dipped in there. So I would be laddering bids in this range. Okay. Okay, so about this horizontal I was talking about. It was the range high here for this range. And this is significant to me because not only was it the range high, but we broke this resistance, traded above, and then came back down and tested it as support. And it's pretty strong too, because we have this huge wick up. Like it was eaten up immediately. So that's why I like that. That area, and this looks good to me right now. Let's go down to the 3-day. And so we have the same candle structure that I was talking about earlier. This is where I'd want to buy because you have the run up, right? And just like with I forget whether it was ADA or XRP, it's the same concept. You have the big run up, and then you kind of cool off. The first spot I'm drawing a horizontal is right here for an entry, because say let's do the same exercise we did with XRP or ADA. Like you miss this run up, or you whatever you want to add more UNI to your portfolio. So you see this run up, right? You're like, ah, dang it, I missed it. If you drew this horizontal, and these candles are over a 3-day period, right? I keep that in mind. You drew this horizontal, you're bidding here. And within that period, you've wicked down 1, 2, if you move over 1, 2, 3 times. And so your bids are filled. You're in a position now. You have taken a position based off of a real level, and look, you're in profit, and you're ranging higher consistently. So again, you've got we'll just call this range low, higher low, higher low, higher low, bullish until proven otherwise. Um, let's move in a little bit further. Oh, you can also see this resistance has been consistent, right? So now Uni looks like it's forming or has formed a little bit of a range here between these two lines. And it makes perfect sense, right? We this part of the chart hasn't happened yet. We drew this horizontal because it's the top of this range. Okay, we broke this range. Once we broke this range, where's the first spot we're going to test for support? Right back here, right here at this line we drew. So another good entry spot, another really good entry spot. So let's step down to the daily. So with the daily, we're seeing this horizontal that we drew, support held, right? So we like this. We like this. So it's trading in this little channel, right? You can trade that up and down if you wanted to until it broke out. And let's talk about false flag breakouts. That seems important to discuss. So it broke above this horizontal we drew, but it's weak. It's weak. Look at these upper wicks. Look at these upper wicks. I don't like that. I don't like that at all. And not only that, what you want to see is exactly what's happening over here. And the same thing I think we talked about with ADA. You want to see this range. You want to see it trade up, you want to see it break and trade above and then come down and test it. Then come down and retest. Then that's when you know you've got your support level and that's when you can take a position. That's when I would feel comfortable taking a position in UNI, is after this breaks above, consistently trades above it, retests it, and then boom. I mean, that's still 34, 33 to 42, like on leverage, that's a good trade. And I want you guys to keep in mind too that smaller trades over time compound. And there's nothing wrong with holding a position in a coin that you feel really confident in for the future for whatever reason, right? As long as you have a good thesis and that thesis makes sense and you're not just, you know, gaslighting yourself into thinking that you're going to become a multimillionaire because everyone on the Uni subreddit, I'm just using Uni as an example, nothing negative towards Uni, but just because everyone on the Uni subreddit says this thing is going to, you know, 5,000, 10,000, it has to happen. It's inevitable. If you get involved, if you see people saying things like that, um, that don't understand market cap, don't understand realized cap, don't understand fully diluted market cap, don't understand the chain itself, the developers, any of that, if you're doing fundamental investing in crypto, you are now a bag holder. That is not a position you want to be in a bear market. Trust me, I've seen it many, many times. It's not a place you want to be. So anyway, I just wanted to get that off my chest. I think that's an important part of this game. So where were we? Oh, we're talking about this range, right? And how we broke range above, came back down to support, and that's where I would take a position. I would take a position there and watch this line, this horizontal, as resistance, and see if we reject off of that again, and keep tapping it and kind of trade in that same range, or if that range widens up, like if we do something like this, then I might get a little bit nervous, right? But like I said, we have low, higher low, higher low, higher low. Everything looks good with Uni so far. We don't see any signs of a top yet, which is good. Like I said, I think altcoins are good. Are looking good right now relative to Bitcoin. Personally, I think a lot of that has to do with a lot of that has to do with Elon casting a shadow over Bitcoin right now in terms of energy consumption, which is, let me just get this off my chest for a second. That narrative is it's not just false. It's been debunked like over and over and over again. I'm not going to get into the specifics because I think I've already ranted in chat about them, but you could look them up on your own about what percentage of miners use renewables, what what amount of like terawatt hours are used on the Bitcoin network versus waste energy, the grid makeup, and don't even get me started on Tesla cars saving the world using grid energy, but Bitcoin is bad somehow. I don't even want to talk about it. I'm upset. But regardless, I'm sorry I keep getting sidetracked. I hope I've done some pretty decent analysis on Uni. Another position I think that I would look to take is a break of this range that it looks like we're creating now. Let me zoom in a little bit. So a break of this range and then trading above it and retesting is where I would take a position to go to move a little bit higher to the upside. I would feel comfortable with that. So, is there anything else that's interesting about this? Oh, yeah, you check this out. Remember that pattern I was talking about for bottoms and trades to take? Well, what do we have here? Big wick down, one to run the stops. Wick down, one to run the stops. Look, it's like clockwork, guys. Wick down, up. There's your trade. Sell at the first sign of weakness. Wick up. Sell at the first sign of weakness. I don't know if that's weakness yet. We haven't seen enough structure here. I need to see how this candle closes before I would make a decision on whether I sold that or not. But anyway, you kind of see what I'm talking about there. This pattern repeats itself over and over. See if there's anything interesting to look at over here. Already talked about this horizontal and why we set these here after a big run up to try and set bids and ladder bids in. That still holds. Anything about Uni that's interesting to me other than this? I still think, Bill, that somewhere in this range, and I would even go as far as this range, this box, but specifically up here, as like this, I would bid decently heavy here, and if we flushed any further, I would set stink bids on this horizontal, and I would bid heavy in this lower area because you've got all this acting as support in that area, which is very strong on UNI. That is like one of the only big support levels we've seen in this area, besides all of this that's now forming. But this is still forming, so there's time for this to break to the downside, even though that's not the current trend. Just keep that in mind if you're looking to take a position or add to your position. But let's trying to think if there's anything else I want to add to this. Bill, let's zoom out. I mean, the market structure looks good. I don't see any signs of a. The only time I would get worried about your uni position is if we saw something like with what happened with Bitcoin, where you have you're making smaller and smaller higher highs, and then you start to come down, right? You start to come here, and then you start to come here, and then instead of bouncing off of this trend line to the upside, you instead come down. So that's this type of structure here is what I would kind of worry about, Bill, if you're holding out, if you just took a position, or if you're holding a position and want to take profit somewhere and maybe buy back at a lower price, to have more tokens for your fiat value. And see that might even, something like that might even play in perfectly, because what most people will do is they'll see this structure forming, right? They'll see this structure start to form, and they're gonna sell like right here. And guess where this thing's gonna bounce? It's gonna bounce here, or it's gonna bounce here, and it's gonna bounce pretty hard, I'd imagine. Or you start to get in a range, people are scared because they just got burnt, and instead of buying this accumulation range, they look to buy lower, which you're not gonna get most likely. Um, and then they FOMO buy up here. So hopefully all that helped to some extent, but that's what I would look at in the near term to even midterm, really, and just watch the levels. And if you're holding a coin, this application I'm using, TradingView, it's free. It's free to use, so make your watch list like I have over here with anything you're looking at, and um, try this out. Try this out, especially if you're holding just a couple positions. Try this out, not so that you're trying to be a trader, or really dynamically manage all, like, a bunch of positions at once, but do it so that you can make informed decisions about when to sell your asset, and when to add more, or when to buy, and stack more tokens. Like, this will help you a lot if you can just learn the basics. I mean, all we're talking about here are just some lines. That's it. That's all I use. And maybe like 2 indicators. That's it. I'll use this sometimes, and this. That's it. And a lot of times I don't even need to use those. The last thing I wanted to mention, guys, I want to talk about something that I think is pretty relevant. So let's do this. this right here, and this. So I'm sure everyone saw this tweet. Um, if not, you can read it, but basically what he's saying is, well, I talked about it in the Discord, but this tweet is what blew us up for a minute. Okay. And then I want you guys to look at this, right? So we don't have to blow it up, but working with Doge devs to improve transaction efficiency. Okay. There's two things that bother me about that. I'm just gonna go to a chart for now and just sit here and while we talk about this. Um, well, there are no Doge devs for one, but Elon has a lot of influence. I mean, everyone knows this, right? Especially over the younger generations. And he likes to play games. That's been quite apparent with the Tesla stock manipulation, the tweets, and all that. So I want to talk about Doge because I actually think that paying attention to Doge matters now. And I think it matters because if Elon wants it to happen, um, if Elon wants it to happen just because Elon wants it to happen, I would be rather afraid that he casts this shadow over Bitcoin due to the energy narrative, which takes the institutional bid off the table and makes a lot of companies shy away from buying and making their Bitcoin buys public uh, because of something that he is making it seem like it creates a net negative effect, which is not true at all. Bitcoin creates a net positive effect. For the amount of energy it uses, there are orders of magnitude more good that it's doing in the world for people, uh, especially those who are oppressed in other countries. So anyway, what I'm getting at is I would pay attention to Doge and pay close attention to Elon because if he wants something to happen, he's got enough weight to try it and actually make it happen. And I'm kind of starting to get the vibe that he's really trying to do this for fun. He's really trying to pump Doge for fun. So pay close attention to that. I'll have more on that another time. I'm really tired after streaming twice and failing at it once. But anyway, guys, I think we kind of look to the next week, see what Bitcoin does. Alts look like they're, you know, some alts look like they're reasonably strong right now, especially what do we have right now? What the DeFi tokens looked really good after Ethereum's big run up. And there's something I want to talk about with this coin in particular that has nothing to do with the chart. Cope. Uh, I'm gonna drop some pretty big alpha on this tomorrow, later in the evening. So I really want you guys to listen to that because I think I think you won't regret it. At least want you to look into it. Um, but anyway, if you guys want to hear anything else, if you want me to explain anything any better, if you want me to look at any coins on any given day, please post them in the chat. I'll do my best to get to them. And if you want me to explain something in depth or kind of discuss something different or go a different route, um, talk about something completely different, get my input on just something in general, just to chat, let me know, and we can do whatever. Um, I hope this helps you guys. Please do give me some feedback, though. I really appreciate feedback, and that's something that's lacking in the chat right now. I'd really appreciate feedback. So thanks, guys. Have a good weekend.